Total account failure rarely stems from a lack of strategy. Usually, the plan being traded is simply a mirage that vanishes under real-world pressure. When the live market opens and prices start flashing, holding a vague idea in your head provides no protection. Without rigid, written rules dictating every move, you are simply guessing. Guessing triggers a predictable psychological cascade. You see a green candle spike and feel the FOMO. A position dips and you panic sell. Minutes later, you're revenge trading to claw back the loss. Professional traders treat their strategy as a rigid contract, a set of rules that dictates exactly when to enter, how to manage the trade, and precisely when to walk away. This structure is designed to remove human emotion from the equation, replacing your instincts with a mechanical, repeatable process. Every functional strategy rests on three primary pillars. It must define the specific asset, the time frame you're watching, and the exact conditions that lock together to trigger an entry and an exit. Whether you rely on trend following, trade breakouts, execute rapid scalps, or hold for multi-day swing trades, this anatomical framework remains the same. Regardless of the style, a strategy only gains validity when it removes the burden of making decisions in the heat of the market. Before generating wealth, you must survive. Risk management acts as the lock on your account, prioritizing capital protection over massive wins. This survival depends on one absolute requirement. You must know your exact mathematical stop-loss before your entry order fills. These scales illustrate the R multiple, the mathematical engine of a strategy. You risk a small unit, 1R, to capture multiple units of reward. A strict positive R multiple allows you to lose over half your trades and remain net profitable. Implementing this requires position size calculators, enforcing hard daily loss limits, so a single bad day cannot derail your overall progress. Entering the market without these parameters abandons trading entirely, crossing the line into casino gambling. Once you have your rules and risk limits, the strategy faces a mandatory stress test. It must prove its viability through backtesting before a single dollar is put at risk. Backtesting applies your rules to years of historical price action, using the past to mathematically confirm a statistical edge. This uncovers the metrics that define your reality: accurate win rates, maximum drawdowns, and average winner ratios. As this trading research notes, a structured journal helps traders understand their results and supports discipline. Reviewing this data identifies specific behavioral patterns, like hesitation or cutting winners short, that remain hidden during live sessions. An idea must survive its historical stressors before it earns the right to be traded with real capital in the present. If a strategy is perfectly backtested and risk managed, why do so many traders still fail in the live market? The cause is usually the execution gap, the dangerous distance between a perfect theoretical plan and flawed human execution. This gap widens every time a trader drifts. Changing strategies after one losing week, ignoring predefined stops, or abandoning the plan for random, unapproved setups creates a cycle of losses that the data can't fix. Rigorous, mandatory journaling is the only way to diagnose whether your losses stem from a broken strategy or a broken discipline. TradeZella provides the infrastructure designed specifically to close this execution gap. It transforms your raw data into a diagnostic tool. Through the playbooks feature, TradeZella tags and isolates your setups. You can see your win rate for a breakout versus an open range trade, proving exactly which setups are generating profit. The trade replay feature reconstructs your executions tick by tick. Rewatching your trade unfolds exactly as the market printed it, exposing the emotional mistakes that are often invisible on a static chart. Whether you are a beginner, a day trader, or managing prop firm evaluations, surviving the market requires this level of analytical infrastructure. A trading strategy is only as powerful as your ability to measure it. Backtesting proves your potential, but journaling proves your discipline. Refine your execution process today through the link in the description for 20% off TradeZella.